Hi, welcome back to CBSE Board Economics. I'm Saddam Hussain. We welcome you all. Last class, we discussed about the government budget. Government budget and its objectives. What exactly is the government budget? We discussed it. It's a systematic statement showing estimated receipts and expenditure of the government over a fiscal year or financial year, accounting year, running from 1st April to 31st March. I repeat, define government budget. Government budget is a systematic statement showing the estimated receipts and expenditure of the government over a fiscal year running from 1st April to 31st March. And the objectives of the government budget, there are 4 objectives and we discuss them in detail. Please see some of my videos. You'll get a fairly good idea about the objectives. Number 1 is reallocation of resources, that is developing all the regions in the country. Number 2, reducing inequalities of income and wealth. Number 3, price stability and economic stability. And number 4, taking care of public enterprises. And we also discussed the government budget has 2 parts. One is the revenue budget, the other is a capital budget. Now today we will be discussing about revenue budget. What exactly is revenue budget? We discussed it. Revenue budget, it shows the current receipts of the government in terms of taxes and the current expenditure, how the expenditure is met with those receipts. That's the revenue expenditure. That's the current receipts during this fiscal year from 1st April to 31st March of next year. How much the government is going to collect the taxes and how they receive taxes and how they are going to spend it. That's the revenue budget. Revenue budget is written here. You can see it here. Revenue budget shows the current receipts of the government and expenditure that can be met from these receipts. That's the current receipts of the government and the expenditure that is met with those receipts. Revenue budget shows the current receipts of the government and expenditure that can be met from these receipts. Now let's go further. Revenue budget is divided into 2 parts again. Revenue budget. Number 1 is revenue receipts and number 2 is a revenue expenditure. Number 1, revenue receipts. Number 2, revenue expenditure. What exactly is revenue receipts? What exactly is revenue receipts? Revenue receipts neither increase the liabilities of the government nor decrease its assets. I repeat, revenue receipts neither increase the liabilities of the government nor decrease its assets. It's pretty good for the government. For example, what it means, when you pay taxes to the government, maybe direct tax or indirect taxes, the government is not liable to do anything for you. There's no liability to the government. We pay income tax, we pay property tax, we pay wealth tax, we pay interest tax, and firms pay corporation tax, and we are paying GST. And you have no right to ask the government provide me these facilities. So liabilities of the government are not going up because you pay tax, nor assets of the government are coming down. It means the government is not selling its assets to provide you some extra facilities. So, okay, now what exactly you are supposed to write in case they ask you what are revenue receipts? Revenue receipts neither increase the liabilities of the government nor decrease its assets. Neither increase the liabilities nor decrease the assets. Revenue receipts again divided into two parts. One is the tax revenue receipts, non-tax revenue receipts. Revenue receipts are divided into two parts, tax revenue receipts and non-tax revenue receipts. What exactly are tax revenue receipts? Tax revenue receipts are the receipts or the income the government gets by imposing or levying taxes on the people. This is in terms of taxes. Tax receipts or tax revenue receipts are the receipts or the income the government generates or gets through imposing taxes. And again, in India we have two kinds of taxes. One is the direct taxes, one is indirect tax. Which are the direct taxes? We'll see the examples and then discuss what exactly is direct taxes. Direct taxes we all pay directly to the government. These are income tax, these can be property tax, these can be corporation tax, these can be interest tax, these can be wealth tax which you pay to the government. Interest tax, wealth tax, property tax, corporation tax, these are the taxes which we pay directly to the government. Why do we call them direct taxes? These are direct taxes. These are called direct taxes because the tax liability and burden, or we call it in economics as incidence of these taxes, lie on the same person. The tax liability and burden of these taxes lie on the same person. What it means, if they're imposing tax on you, maybe income tax or property tax, wealth tax, the tax liability is on you, and to pay the tax, the burden is also on you. And these are recurring. You keep on paying to the government every year. These are recurring. You have to pay it. And you just can't escape direct taxes. If you have property, you are liable to pay property tax. If you are earning huge money, you are liable to pay income tax. These are the taxes. The second one, under tax revenue receipts, you have indirect taxes. What are indirect taxes? Earlier there used to be sales tax, there used to be octroi, there used to be customs duties, lot many taxes. Now, all these taxes have been clubbed together as one now, that we call it as GST, Goods and Services Tax. Now, indirect taxes, GST, why do we call them indirect taxes? The tax liability and burden is on different people. What it means, we take an example. When you buy something from the market, you may buy a TV, car, refrigerator, micro oven. When you buy, there is GST, you have to pay GST on it. The GST liability is on the shopkeeper, but he will pass it on to you. That's why they are called indirect taxes. The GST liability is on the shopkeeper and the burden is passed on to you. That's why they are called indirect taxes. So there's just one indirect tax now, that is GST, Goods and Services Tax. So broadly speaking here, we can differentiate between direct and indirect taxes. Direct taxes are income tax, property tax, wealth tax, interest tax, corporation tax. Indirect taxes is just GST, Goods and Services Tax. Direct taxes, the second point, is the tax liability of the direct tax and the burden is on the same person. In case of indirect taxes, the tax liability and the burden is on different people. The third point, you just can't escape direct taxes. You're liable to pay. You have to pay it. But you can escape indirect taxes legally by not purchasing or buying goods. And direct taxes are imposed on income and wealth of a person. And indirect taxes are imposed on the same income when you spend it. If you don't spend it, you will be saving a lot of taxes. That's direct and indirect taxes. Now let's proceed further. And revenue receipts, tax revenue receipts, we finished it, and we have non-tax revenue receipts. What are non-tax revenue receipts? These are not in the nature of taxes, these receipts. The government is collecting some revenue, the government is generating some revenue, earning some revenue, not in terms of taxes, but some other means. Those are called non-tax revenue receipts, not in terms of taxes. Which are these? These are commercial revenue. Again, they are divided into two: commercial revenue, administrative revenue. What is commercial revenue? Commercial revenue, we know that the government also sells certain goods and services. They charge money on this. This is a commercial revenue. Which are the things? Commercial revenue. Postage stamps. When we buy postage stamps, the government is generating income. They're earning money. And this can be tolls. We have to pay tolls for roads, bridges and all. And then you have interest. The government must have kept some money in the banks and all, and they are generating interest on that. And this can be electricity. The government provides electricity. That's a kind of revenue for the government. And dividends. The government must have purchased shares, bonds of some companies, and they are getting dividends on this. And railways income and railways profits. And then you have public sector undertakings. This can be NTPC, NHPC, and many public sector enterprises. They also generate some profit. So that is commercial revenue. Commercial revenue is the revenue which the government earns by selling goods and services. This can be income of the railways. This can be income of the public sector undertakings. This can be interest. This can be the postage stamps income which the government gets. These can be dividends. So this is a commercial revenue. And the next one, you have administrative revenue. What exactly is administrative revenue? This is the revenue which the government earns or generates in the process of administration. What exactly is administrative revenue? The government collects revenue from the public when they do house registration. When you buy firearms, there is some registration fees you have to pay for the government. You have to pay when you get your passport, when you get your driving license, fees and college fees. Government colleges, they charge some money, that's college fees. Registration fees. This registration can be for property, can be for a firearm, for anything. You have to pay some registration fee. Fines and penalties, the fines which we pay to the government when you jump a red light or when you commit a crime, fines and penalties. So these are the revenues which the government gets. That is administrative revenue. How do you compare these? Commercial revenue, this is the revenue which the government gets by selling goods and services. This is the administrative revenue, is the revenue which the government collects in the process of administration. And commercial revenue, postage, tolls and electricity charges, railways, interest payments, dividends, etc. And administrative revenue can be fees, college fees, fines, penalties, and this can be registration fee for property or firearms. These are all the revenue receipts you have. These are the revenue receipts which are recurring. We have to pay revenue. The government keep on collecting these money every year. So these are the revenue receipts. When the government collects these revenue receipts, they spend this money in terms of revenue expenditure. Revenue receipts, go for revenue expenditure. What exactly is revenue expenditure? The first and the foremost job of the government is to provide administration. So provide administration, they spend huge money that they collected from revenue receipts only. So what is this administration? This can be salaries of the government employees, salaries of the defense people, defense services. This can be school teachers' salaries. These can be scholarships which the government provides to the people. This can be subsidies. This can be pensions, and this can be grants which the government gives to the state government, salaries, subsidies, pensions, of course, to the retired government employees. Interest payments, if the government has borrowed money from other countries, they have to pay interest payments, administration expenses, defense services, etc. So this is the revenue expenditure. This is also recurring. They have to pay salaries every month. So interest they have to pay every month or every year. Scholarships they have to pay, subsidies. Now once again we'll discuss revenue budget. Government budget has two components, revenue budget and capital budget. Capital budget we'll discuss in the other video. So we are discussing today revenue budget. Revenue budget consists of, what exactly is revenue budget? Revenue budget consists of revenue receipts and revenue expenditure. How the government meets its revenue expenditure through the revenue receipts. That's revenue budget. Revenue budget shows the current receipts of the government and expenditure that can be met from these receipts. Revenue budget is divided into two parts, revenue receipts and revenue expenditure. Revenue receipts, how do you define revenue receipts? And then you have revenue expenditure. What are revenue receipts? Revenue receipts neither increase the liabilities of the government nor decrease its assets. Neither increase the liabilities of the government nor decrease its assets. Again, revenue receipts are divided into two parts: tax revenue receipts and non-tax revenue receipts. Tax revenue receipts are in terms of taxes which the government collects from the public. These are again divided into two parts: direct taxes and indirect taxes. Direct taxes are income tax, property tax, wealth tax, interest tax, and other ones. And what are indirect taxes? It is just GST. Direct taxes, that in case of direct taxes, the tax liability and burden is on the same person. In case of indirect taxes, the tax liability and burden is on different people. So in case of direct taxes can't be escaped, you have to pay it. Indirect taxes can be escaped by not consuming the commodities. Direct taxes are imposed on the income and wealth of a person. Indirect taxes are imposed on the same income when they spend it. Otherwise, you don't have to pay GST. Only when you buy some commodity in the market, you have to pay GST. Now, those are the revenue receipts. And revenue expenditure, when the government spends money on scholarships, unemployment allowance, pensions, government employees' salaries, defense personals, administration of the government, it can be subsidies. So revenue expenditure, how do you define revenue expenditure? Neither increase the assets. What it means, when you are paying subsidies and scholarships, assets of the government are not going up, nor decrease the liabilities. When you are paying salaries to the government employees, defense, scholarships, subsidies, and the liabilities are not decreasing. The government must have borrowed money from other countries, so they are not repaying that. So revenue expenditure neither decrease the liabilities nor increase the assets. So we'll make a comparative study: revenue receipts and revenue expenditure. Revenue receipts neither increase the liabilities of the government nor decreases assets. Keep that in mind. Revenue expenditure neither increasing the assets nor decreasing the liabilities. So there are two tax revenue receipts and non-tax revenue receipts. Tax revenue receipts are direct taxes, indirect taxes, and non-tax revenues, commercial revenue and administrative revenue. Revenue expenditure, grants, salaries, subsidies, pension, interest, and all other payments. So that's all we have time for today's video. I'm sure you must have followed it. Till we meet next time, it's goodbye from Saddam Hussein. Work hard for the examinations. Goodbye. Best of luck.